it's time to look at the Zimbabwean markets and just checking in on how that Zim mining index closed out for the week. We'll get the graph up on the screen shortly there, but overall just looking at just a recap on the market performance so far this year. You've got the Zim overall market up by 42%, and that's the Zim mining index 71.45. Looking in on the industrial index, and as I said, 42% gain is what we're looking at this year, but cooling off and a bit of sideways trade so far this week. 217.66 is where that overall index closes. Let's just check in on some of the factors that we're seeing playing into market activity right now. Jabule Magutakwana, Senior Fund Manager at Bank ABC, joining us on the line from Harare. Thanks for joining us today, Jubela. I mean, there's a lot of kind of uncertainty around the election date, and we won't get into all of that right now, and the fact that SADC is disputing the 31st of July election date. But overall, do you see this denting sentiment in the market? I mean, how do you see some of the key players being affected by this type of development? Well,
the market is already responding to this. In fact, since the SADC summit, the market has been trading sideways. There have also been recent engagements surrounding the setting of the election date. But I think more interestingly, yesterday we started to see some of that concern starting to wear off. In fact, the sell-off was certainly slowing down, and an indication that perhaps we might be reaching this short-term support level for the market. And if you look at what we saw today, a very encouraging volume coming through, very healthy at $3 million. This is versus our average daily volume is about $1 million. So this is 3 times that the average volume. Mm-hmm. But the key issue was that more than half of that was in Delta, and this is a key bellwether that everybody will be watching. So this happened at a price of 49 cents. Although there were small losses in other counters, I think Econet, ICO, Inscore, and PPC, they lost between 0.3% to about 3%.
Mm-hmm. One stock that came into the spotlight this week was a mid-tier banking stock, FBCH, and 8 million shares of that traded, which is around 2% of the issued share capital. So what's caught investors' eyes for this specific banking counter?
This is a very interesting volume. I think FBC, we saw 8 million shares going through. In fact, if you look at what we have seen, cumulative volume since the beginning of the week is now about 2%, of the issued share capital of the company having traded. But to us, what is very significant is that, first of all, FBC, in terms of the pecking order of the market, FBC is a mid-tier stock. The second issue is that as a banking stock, we have had recent indications by the Reserve Bank governor that, capitalization deadlines may actually be relaxed and relief will be given to the banking sector. And the expectation is that an announcement will be made in the upcoming midterm monetary policy statement. Mm-hmm. The third issue is that we have got information to the effect that a foreigner was involved on the buy side, an indication that foreigners are starting to actually warm up to the market in an environment where we have got all these issues that investors will be worried about. Mm-hmm. The fourth issue is that it was not limited to just FBC, although there was a large volume on FBC, but other banking stocks were also pretty much in play. We saw Barclays, which is already up 20% in the week. CBZ, NMB, ZB, all these banking stocks ended on very, very strong beats. But you know what? My overall comment is that there's concern about risk. There's concern about Zim risk. But preliminary work we have looked at, there is indication that the ZSC may actually be semi-strong efficient. So, our view is that most of these risks that we are talking about may already be discounted for in the market. We didn't wake up today to realize that, we've got elections coming up. Mm-hmm. This has always been known. And, already you are looking at a market that is 42% up, year to date. And, I think this sort of breather, I think, is necessary in terms of the market environment.
But would you be buying into specific counters? Because if you are seeing a breather now, would you be buying into specific stocks, given we've seen a 42% rally at this stage of the game? Would you be waiting until after the elections? I mean, what's your strategy right now when it comes to managing or dealing with where the market is at the moment?
Well, the market already indicates very, very interesting opportunities. I think if you were to take a magnifying glass and look at the market, you would see that out of a total market cap of about 6.3 billion, more than 55%, more than half of that is really accounted for by only two counters, that is our bellwether, Delta and Econet. There is a hell lot of value that we think is still trapped in the mid-tier stocks. And certainly when you look at our market and you draw parallels to what we see in the region, on a PE basis, on all matrices, the ZSE to us still presents very, very interesting opportunities, especially if one is looking at it from an African market point of view.
Let's just move from the equity market to the tobacco sector, because so far year to date, or in terms of the tobacco season, 152 kilograms have gone under the hammer, and that's at 21% up year on year. So basically, certainly some strong signals coming through from the tobacco side of the economy. Do you see this as helping to contribute to plugging the current account deficit? I mean, what contribution will it make to government coffers?
In fact, we've done 152 million, kgs so far, but the expectation is that we are on the road to 170 million kgs. The tobacco selling season ends sometime in September, so there's still a bit of time. Deliveries are coming through, and tobacco farmers are still, coming through. There is still mop-up sales still to be done. But the significance of the tobacco crop to the economy is the injection of new liquidity, because participation in the sector is mostly from new inflows that are coming out outside the country. And so far we have seen 562 million, which is more than $500 million, that has come through as new inflows into the economy. Unfortunately, this $500 million has not been able to actually deal a dent to the challenges that we are facing as far as the current account balance is concerned. I think as a country, what is happening is that we are, importing more than we are exporting, and there's probably an annual gap of up to about $4 billion.
So it is helping to a degree, but certainly not to the degree that overall that gap is requiring. Thanks for joining us today, Jubela Magutakwana, Senior Fund Manager at Bank ABC.